I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different than everything else out there. I bring together a new and an experienced investor on each episode, and I let the aspiring investor ask the questions that they need answered. So if you're an aspiring investor yourself, you probably will have the exact same questions. Now, before we get to this episode, make sure you hit the subscribe button below and that little bell to make sure you get notified every time we post a new episode. And now, enjoy the show. So Rachel, we got Feras on the line. What do you want to ask him?
I was doing a little bit of research, and you and your partner, Ben, you guys did a heavy value add. And I was wondering, what was your strategy to overcoming that risk for the new tenant base and managing that financial risk, doing the 100% lease down?
What it's about is you're building a community, right? Ultimately, especially in a value add play, you are building a community because life gets a lot easier if you have a community. People want to live there. People will take care of their unit. People will tell you who's not contributing to the community.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's episode, as I am for most. This is a great, we've got a great group of people here today. We got Feras Moussa from Disrupt Equity, and we got Rachael Jones. And, you know, Feras, first of all, you're the most experienced investor today. So you're up first. Welcome to the show.
Thanks, Brian. Glad to be here.
Yeah. And Rachael, welcome to you too. But we'll talk more specifically with you in a little bit. So hang tight for a sec.
Okay.
Anyway, Feras, tell us a little bit about yourself.
Yeah, so a little bit about me. I actually came from a tech world, right?
Mm-hmm.
So, high school, I had my own web company. I've always been really, just had a big passion for computers, and college ended up doing computer science and finished out that and interned at Microsoft actually.
Yep.
Did Microsoft for several years and then left Microsoft to go do my own software company. Did that. And then that's whenever really I started to find out about real estate, right? Like a lot of viewers, I was looking to deploy my own capital in real estate, learned a lot about it, and kind of just really bought my first fourplex about a mile from our office right now, just down the road that way. Bought a bunch of houses, realized it doesn't scale, and found out about apartments and realized there's things that I love. It's people's numbers and systems.
Yeah.
And so started Disrupt Equity, and the rest has been kind of history since then.
Nice. So from tech, computer science, and now one thing that is kind of interesting, there's a lot of prop tech coming on. Are you still very much into tech as you're investing in properties?
I actually am, and it's funny. So we're also vertically integrated. We have our own management company that does first and third party management. And one of the things that's been kind of interesting is really being able to see the evolution of tech within that industry, right? Because prop tech is heavy, and it makes sense for the management companies. Or for people that use third party, it's hard to influence change on that stuff unless the management company wants to do it. And so, I'm still very in tune to tech, and now with the management company, I'm starting to really see and hear a lot more about prop tech and try to evaluate what could work or what couldn't work.
Yeah. So what are some of the things that you guys have integrated tech wise into, the entire system that you guys have?
Yeah. So I used to tell people, whenever I left Microsoft, right, I left because the vision for me was to build software in old industries like real estate, right? That was the value prop for me. I've since realized it's really not about building brand new software. It's really about tying everything together into one cohesive system, and that's where we excel. And so it's less about a new thing. It's about making everything work well together, right? The way we work from Teams, we use Asana, to way we use a RealPage One site, and everything is one cohesive, constantly evolving system, right? But maybe to answer your question a little differently too, right? A specific tool that we use is something that wasn't the norm is our due diligence is pretty slick. We go in, there's a clear kind of checklist. It's an app on the phone, and basically the team knows to go take a picture of the front door and give it a rating, take a picture of the stove, give it a rating. It's pretty quick, but very, as a owner, right, you get a very detailed report because you have a photo journal of everything in the asset. You have clear scores that, hey, we had 50% of the stoves are rated, terrible, right? And from that, you can start to have a good idea as to what we need to do whenever we acquire this asset, and where should we allocate our capital.
Now, is that an app that you guys created, or is that one that is a third-party app available?
Third-party app. I actually know the CEO, and kind of, I knew him from before, and once I had the management company, it made sense that we started using it. It's gone very well.
Yeah, we've done something similar. It's probably not nearly as sexy. We used Google Forms of all things, same type of thing, and you just walk in And the way the Google form is set up is as soon as you hit submit, it says fill out another form. You go to the next unit, fill out another form.
Hey, that works.
Yeah.
So you don't get the photo attachment, but you get the data entry correctly, right? Is that what it is?
You can actually upload photos. It's not as seamless, but you have to take the picture and then go to your photo reel to upload the photo. So
that's actually a great idea. I had not thought of that. And that's what I tell people, right? It's people really want to like boil the ocean. And even as a software guy, trust me, I'm the first guy that like, oh, it's all possible, right? But I've learned that it's less about doing it all perfect, but doing something that works and then iterate. I'm a big fan of launch and iterate versus people that want to have everything, perfect. And so that's actually I'm pretty, I like that actually. That is surprisingly good.
Yeah. And
it gets you half of the way there, right? So
it's amazingly powerful what, some of these apps that are available, or some of these things are just available. And if you can learn to adapt them, I wish I could say that the Google Forms idea for the due diligence was my idea. It was one of my partner's idea. And when I saw it, I was just like, this is genius, because everything ends up on a spreadsheet. Everything is in, file folders. And so you have all the documentation there later, but it's something that I like it. You
got to look at it. It's your idea indirectly. You're the one that had that partner, right? So you identify that partner, and that's what it's about. Put better people than you around you, right?
Yeah.
So
there's a reason you partner up, and that's to share ideas, to put, they always, the oldest saying, what, two heads are better than one. And that's true about partnerships as well. So
absolutely.
Now as a computer scientist, now my background, a couple degrees in math, and I had a minor in computer science. So, you talk about systems, and that's like the name of the game in, math and computer science, is you create these systems. That's what a software program is. How has your background in computer science helped you with the systematizing of your business?
Oh man, it's helped tremendously, right? I see problems and I have to stop myself from starting a new software company every couple of weeks. True story. But really, we see problems, and similar to you, right? You thought of, your partner thought of the form thing. It's a very simple, elegant solution to a hard problem, right? And being able to do that in anything, right? There's a lot of times like I say, it's really about dumping a box of junk and figure out how do I tie it together to do something cool. And so whenever we see problems, I have quick ways to solve them. And if it's more complicated, I can hire people, they can build the integrations. I can do the integration myself. And, and maybe the holy grail for us has really been just our acquisition pipeline. Right now, we have a very robust system. We are underwriting 40 deals a week, probably right now on average the past 5-6 weeks, because there's a lot of deals out there. 40 deals fully underwritten. I'm not talking about we looked at an email. I'm talking about we pulled the CoStar report, we ran all the numbers, normalized the T12 and plugged it into our model and evaluated the debt, all of the things that you need, like fully underwritten, right? Well, you can't just do that on a whim, right? It's a system that we have, and we've constantly evolved, and we have a whole team focused on that. And so that's an example of something that, because of the tech background, right, was able to kind of put it together and do something really powerful, right? And I don't need 100 people, right? I have 4 people doing it, right? And kind of in different roles and different steps of the pipeline. So
nice. Yeah. And that's something that definitely helps scale. I wish we had the horsepower. I bet we do have the horsepower actually to do 40 deals a week, but I think we need to systematize it a little better. So I'm gonna dive into something else that you mentioned, vertical integration. Your bio says you got 3,000 or so units. Is that accurate?
Yeah.
Okay. So when did you guys decide that it was time to bring property management in-house?
Oh man, we decided whenever we just struggled to find good management companies, right? We had seen the good, the bad, the ugly. And we ultimately decided, we knew it was something that we were going to do, right? Our goals are not a 2-year goal. We have a 15-year horizon. So everything we do as a company really needs to be geared around not where we are today, but where we're going. And we knew bringing management in-house is something that we were going to have to do eventually. And really kind of once we saw just the struggles that we had with third-party management companies, and luckily COVID happened. So we had done it right before COVID, right? But we kind of accelerated that, right, into Texas markets. We had third-party management in Atlanta. They did a good job. And so, we didn't feel the need to go change that, but Texas we did. And, it's a lot of work. And so for people that really think about it, management sucks. It's really one of the worst businesses in the world, but it's an awesome business in its way too, because, it's all about building a real team, and you build a team, a culture, and you go accomplish hard things. But, because we do first and third party, and and when I say it sucks, it's because there's constant challenges, right? And it's an underappreciated business,
Yeah.
right? Because even if you're third party, your manager's always the first to blame, even if it's not them.
Oh yeah.
But it's a very powerful thing to have, right? And it's a differentiator, right? We can look at deals differently, and I know I can operate certain deals much tighter than the guy across the street, right? Or the other management company across the street, and that lets me be able to pay a different price point.
Yeah.
And so it's kind of given us a lot more tools in our utility belt. Is maybe kind of the best way to look at it.
Yeah, and we've struggled with management as well. I think everybody who's in this business has struggled with property management. You kind of expect them to be perfect, and do everything perfect, and when they're not, you end up pulling out your hair. But which is why I'm a little bit thin on top, I guess. But
I saw your picture of the military. I didn't even realize it. So.
Yeah. So that the one that I just posted. Yeah. So day before yesterday was my 20th anniversary of graduating from officer candidate school, and that's I didn't realize it. I was on the call with somebody and I looked up and I saw the date. I'm like, oh my goodness. But anyway, I was once young and handsome and cleaner shaven, but yeah. So yeah, back to the management piece. So right now your assets, you say you have one, you have Atlanta, and then I know Houston and San Antonio. Anything else on the
Houston, San Antonio, doing Austin, and then we third party manage in Dallas as well.
Okay.
And we're doing a Florida deal. So
nice.
Atlanta. So those are kind of the different markets that we're
Florida's
in
hot right now. Now on that Florida deal, are you going to transplant your third party, your first party management there, or are you going to use third party?
We don't have enough mass. We'll use third party on that one.
Okay.
So my partner's actually in Florida right now doing due diligence on that deal. So
nice. Well, congratulations. Hope it all works out, and hope that due diligence apps is getting its good use there. So
yeah, hope so.
Well, cool. So let's talk a little more specifically about one of these deals, and I'll give you two options actually. Pick a deal and let's talk a little bit more in detail, or just talk about your overall philosophy of what you're looking for, what you buy, and how you do things.
Okay. So for us, I like to say we're a very diverse buyer, right?
Mm-hmm.
Brokers love us because we are easy to work with. We have fantastic relationships with them, right? And I tell people this all the time, man, it's not about the off-market deal. There's no such thing as an off-market deal. It's too hot of an environment right now that as a seller, it'd be gross negligence to just do something purely off-market, right? Like brokers know who's hot for a deal and who will pay top dollar. Yeah. It's more about getting to know brokers so that whenever something needs to move quick, something is going on, something falls apart, you're the first guy they want to call, right? And the perfect example of that, there's a deal, that we're very, very close on. I should maybe hopefully hear back today. It's a big portfolio that essentially seller just plopped it on the broker and said, I need you to give me offers in a week. And we were one of 3 people called, right? And so you want to be that person. And so for us, we look at A, B, and C. We have different equity pools for different things. And I think that allows us to there's not really our box is very, it's more about does the deal yield the returns that we look for? Then we have different equity pools that we can match it for. And for us, we don't care if it's A, B, or C, right? Right now, or the markets that we've been focusing more on A and B product, right? The problem with the C product is that most of the stuff's overpriced. They're already factoring in the value add. I'm like, well, I'd rather pay another 2 a door or 5 a door and go buy the B property down the street, right? Yeah. So,
but we will spread between A and C has compressed to the point to where it's almost not worth it to do C's anymore. And so I think you guys, it's exactly what you're saying is you've seen this shift and you're adapting. So you're doing the A's and B's now instead of the C's.
That's exactly right. And so we've been heads down, focusing on a lot more A's than we had been in the past.
Yeah. And you bring up a good point. You want to be that first round of phone calls from a broker when he gets the property. And that's kind of like the holy grail of acquisitions, is being on that broker's short list. If you're on that broker's short list, you're going to do well with acquisitions, so and one thing I like to put myself in the broker's shoes, and I think people are inherently lazy, and especially if you're getting paid by commission. The thing that I think of with brokers, and I've had a couple of them tell me this, a couple of times, is they want a fast sale. They want to work the least amount for their commission, and they're going to call the people who can move the fastest. And in your area, Disrupt Equity is on that top 3 list for the brokers. So
absolutely, and I'll give you an example. Right, we did a deal right at the end of the year that seller really wanted to sell by end of year, but they just kind of didn't get it ready quick enough.
Yep.
So it was going to run the process. But the broker said, hey, these guys are willing to sell, by the end of the year and preempt it. Here's what they're looking for. And we did the PSA in 5 days. We did the close in 45, right? Like now that broker knows that that's what we can do. And that's, I mean, I've leveraged that in every buyer interview I've done, right? Like, you learn to do things to set you up for the next things too, right?
Yeah,
and,
absolutely.
Continue to be able to resonate that message to both brokers and sellers that, hey, we are the easy guys to work with. We do move quick. We're not here to waste anyone's time.
Yep. Yeah. And that's key in this business. So, so next question for you, slight change in direction. What's your motivation? What keeps you motivated and working hard?
Yeah. So for me, whenever I was in Seattle, right, at Microsoft, I did a lot of mountain climbing. And I guess I kind of equate what I do to that. I'm an entrepreneur at heart. I love building businesses, figuring out creative ways to make things work together. And I think what motivates me personally, right, is just there's always something bigger and harder to go accomplish, right? It's not about the money. It's not about this. I love building a culture, having a full-blown team. And I like to say we're a real estate company or we're a tech company. No, I like to say we're a tech company that does real estate, right? Versus the other way around. And build a culture, have a team of rock stars, because then I can accomplish anything, right? There's a phrase, if you want to go fast, go alone. If you want to go far, go together. Yep. So I'm really big on that. And that's what excites me personally, is that there's a bigger hill to climb. And, there's a certain set of things to do to get there. But even, it's just look at our career, right? From looking at the $4 million, the first big deal was like a $3 million deal. Then we did a $20 million deal. We're kind of patting ourselves on the back, and then we did a 50, then an 80. And, now, the sky's the limit. And to me, it's fun to figure out, what is next personally. And then there's a huge sense of reward around just really performing, right? Like some of this stuff is, and kind of a lot of operators don't think about it. Some of this stuff is life-changing for your investors, right? One of our earlier deals, we had a gal that put a huge amount of her net worth into it. And and I didn't realize just how much it was at the time. And, she called us crying whenever sold, saying like, I'm going to just retire in 3 years versus 10. I mean, it's really impactful and it's really rewarding. So.
Yeah, a lot of goodness there, and hopefully I can get some of those calls. We're about to come full cycle on some of the properties that we've had. We've been in the business for 3 years now, and hopefully by the time this podcast airs, we'll have sold the first one off. But anyway, awesome. that's a call that I can't wait to get.
No, it's great to do it, right? To go full cycle, and then you start to put those notches on your belt.
Yep. So awesome. Well, what's next for you?
What's next for us? I mean, I think what's next for us right now, for the next like 3 months, we're in this just kind of stabilized mode, right? We've grown. Let's just pause. Let's set up the right foundation, get everything the way we want it to support the growth, over the next 5 years. And so really we're kind of, eye on the prize of where we're going. And right now it's about we're almost overstaffing the whole company, right? We have 3 new people that started this week, another next week, and more the following, and really getting all the chiefs of all the pieces, make it a cohesive thing, and then let's grow. And
then go bigger. Yep. So you're kind of in that prep phase for the next step. And something I do want to ask you about, because every time I miss it, I get I see people posting about it, I get extreme FOMO. But you also run a multifamily investor network conference, right?
Correct.
Tell us a little bit about that.
Yeah. So about a few years ago, we just kind of realized that there, within multifamily, there's a lot of, what I want to say, it's very not discombobulated. It's very, group, right? There's a lot of different groups and things. And, we have a meetup we run in Houston, and we've been doing it for like 4 or 5 years. We were always the come one, come all. And so we really saw a lack of a conference that's just a generic one for, hey, anybody that wants to come out, come get exposure to multifamily, come meet good operators, come, get a taste of it. And so we kind of had this vision to do that 1-day conference, and we did that 3 years ago, and it's been a huge success since then. And so it's really, did the first one, then we did the goal is to really do 3 a year. Right. And it's really powerful, right? We bring on really good speakers. I'm really particular on bringing on people that have the experience. We're not just here to prop up random people that know what they're doing, vendors that know what they're doing, and make it a really unique environment. And so everyone that's come to it say it's one of the most unique environments, because it's really about just high quality people being together, right? It's literally the name, the investor network, right? We really focus a lot on networking, and it's been awesome. I mean, hopefully next one's going to be in July in Seattle, and continuing to grow that, right? I think the last one we had, last one was in Houston. It's in our backyard. We had 600 people, 200 people on the wait list, right? I mean, we need to find a bigger venue and really build an environment that's not that's not clicky or anything like that. It's just, hey, anyone's allowed to come. Let's go do something fun.
Well, Seattle in July sounds awesome. I think I'll have to turn that
And
into
it's a walk in the park for you. So I'll tell you up front, Brian, I'm going to be heartbroken if you're not out there, right?
I'll be there. 100% committed. And
perfect.
You can come back and air this clip a million times on all your social media channels if I'm not, but
absolutely. All right, we'll do it.
All right. So let's bring Rachael on. Rachael, thanks for being patient and waiting, and very much appreciate it, and welcome.
Thanks, Brian.
Awesome. So Rachael, tell us a little bit about yourself.
Yeah, I'm born and raised North Carolinian, so I still live here, but I moved down near the Charlotte area. So that's where most of my investments are, is in the Charlotte MSA, Gastonia, just around the area. But my background is really in project management. That's where my heart is. So I love doing project management. I'm an engineer by training. So all the spreadsheets, I live in spreadsheets, and coming up with Feras was talking about systems, is like I'm right on that same level. Is the better the system, the better the effort, the better the reward at the end. Ultimately, that's what really leads to success.
All right.
It's funny. So at Microsoft, I was a project manager as well. And I tell people syndication is project management on steroids. You have a lot of different things, especially during a close, 50 different things going on. It's about boom, 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 boom. The people that succeed are the people that know how to manage a project, right? So
different lines, in the military, we call them lines of effort. You have several different things going on at the same time towards the same goal, and you just got to make sure you're keeping track of what's going on in each bucket and syncing them, making sure they're all lined up. So
and then making sure everything just moves forward even a little bit each time, right? Don't let that boulder stop, because it is really hard to start it again.
Yeah, exactly. Momentum's key. Like once we get everything rolling, keeping everybody just kind of going, get their attention on it. Because once somebody gets left out, they're like, oh, nobody cares because they're not asking a question. And then a week goes by and you're like, well, why didn't you do this? Like, oh, I thought it wasn't needed for a while. Like, no.
Whoops.
Needed today.
So Rachael, as your engineer background, what got you investing in real estate, first of all, and what does your real estate portfolio look like right now?
My real estate interest started around 2015, 2016, when the energy market took a dive. So I work in the energy market in my W-2 job, and I really started getting that feel of not having financial stability in case something goes wrong. And so I started looking around for an alternative. My father-in-law actually does single family rentals up in Virginia. And so he kind of put the bug in mine and my husband's ear of, hey, maybe you should go take a look into investing. And it took us a while to come around, I'll be honest. But once we did, we started getting into it, started growing. And right now we've got 5 single families, a triplex, a 6 unit, and now this 27 unit under contract. So 28 unit under contract. So we're really starting to ramp up now.
Sounds awesome. And something you mentioned, it took you a while. I was talking to one of the execs at Bigger Pockets, met him at the Best Ever conference, but he mentioned to me that it takes people on average 500 to 1,000 hours of study and thought before they close on their first deal, before they're comfortable closing on their first deal. So I think what you did was probably very normal, as far as what everyone else does. But anyway, what's one question that I ask everybody? It's always about motivation. What's your why?
So it started out being financial freedom, and now it's time freedom, right? The more I think about it, the more I've got 2 small kids, and one of them's in kindergarten now, and it really just being able to be flexible, be there for them, and get to the point where I can have an impact on their life, and I can have an impact on the community, right? So one of the most rewarding things about real estate that I wasn't expecting is that getting people into a home that they can depend on, that's reliable, that if something breaks, they can call somebody and it gets fixed, and they don't have to worry about it. Like it helps the community, and you can really see that impact just on the local neighborhood. And that's really inspiring for me to really see the impact on people's lives coming out of it.
I love it. All right, we're coming to my favorite part of the show, and it's where I hand the microphone over. So Rachael, we got Feras on the line. What do you want to ask him?
Sure. Well, Brian, you asked some of my earlier questions actually about tech, so I'm going to skip those. But Feras, I was doing a little bit of research, and you and your partner Ben, you guys did a heavy value add that had a poor reputation around the neighborhood. And I was wondering, what was your strategy to overcoming that risk for the new tenant base and managing that financial risk, doing the 100% lease down?
Yeah, so I love to talk about that story. Like that was a property whenever we were touring it, I kid you not. So the backside of the property, had patios, and then it was like a ditch. And there were literally tenants throwing garbage from their
Ooh.
patio out onto the trees of the ditch. Like the trees had bags of trash. It was just that kind of
Ugh.
thing. And but
Mm.
I mean it was in the grow area, it was the the direction of growth in Atlanta. It's a deal, and it's funny. The difference between me and my partners, I quickly saw what we could do. Partner took him a little bit of time to warm up, right? I remember like, the beginning of the day, he was like, what the heck are we getting into? The end of the day, we have a nice picture of us by the sign, him smiling, right? And it's, what it's about is you're building a community, right?
Mhm.
Ultimately, especially in a value add play, you are building a community because life gets a lot easier if you have a community.
Yeah.
People want to live there. People will take care of their unit. People will tell you who's not contributing to the community, right? And so there's a
Mm.
little bit of an art to it. And really, a lot of times, and we've done this on a few deals, you get rid of the right two people that are problematic, the whole property is different. And so on that deal, we bought it at 80% occupancy. The previous owners had no right owning that deal. There was all sorts of just deferred maintenance,
Mhm.
right? Started to clean that up. We brought the occupancy down to 40%, right? And then from then on, it was, brought it back up to 95. And it's about creating a quality place, that people want to live at, and do it in a way that you're building community. Spend money on tenant retention events, right? That
Mhm.
property, we waited till we finished kind of the clean out of the occupancy level, and then we added a playground, started making it different. And we had multiple come up to us and say, I've been here for 4 years, this place is now totally different what it was. And they're excited, right? That leads to longer term tenants, that leads to lower turnover, that leads to higher rents. And so you do that, and it's just kind of night and day what happens on some of these properties, right? And you've took this kind of rough deal in an area and turned it into kind of the diamond. So
Tell
Is
you
it
that's kind of
something?
a scary thing going from 80% to 40% occupancy.
oh yeah, especially
Um,
whenever you have a lender that made it 10 times worse. So it's really the lender that made that one difficult for us because
yeah.
they were a loan to own shop. And so
Yeah.
kind of, I could talk about lender horror stories all day.
Oh yeah, yeah. We had one property, and when we saw that the occupancy get under 50, and that was the plan. Clean it up, renovate it, and put it out. But man, you sure gets you biting your nails. At least for me, anyway. But
Yeah.
anyway,
When you're trying to build that sense of community, is that something? Was the property located in such a place that it's really obvious to like the not the surrounding community, not just the property itself, so that you had to do any marketing or anything like that to really kind of help change the perception of it quickly, or did just starting the work, doing some exterior
A lot of
improvements, like
times
that got the message
that's all
out?
it takes right there. And I'll give you, there's a property, one of the most amazing value adds I've seen. It's a deal that, I kid you not, you can go look it up right now, Shamrock Gardens in Atlanta. We almost bought this deal, and I was just amazed by it because there was right now I think it probably has like 150 Google reviews, and it's like 4.8 stars on a C
Mhm.
class deal in a very rough area, right?
Oh, okay.
And the guy that owned it did just the most unique thing I'd ever done. One of the cleaner than most A-class properties, right? In terms of like not a single piece of glass, cigarettes, trash, nothing on the property. The exterior is nice. The guy bought the street from the city so that way he could repave it to lock it down, and then even reduce access to the ghetto apartment behind. I mean, he just did all these things, and he put in
Mhm.
a daycare. He was really good about using grant money. They have a playground in it that's better than most school playgrounds, right? I mean, it's just, he did some really unique things, and that is the perfect example of what it means to build a community, right? I love that story, that deal. We didn't win that deal, but it really shows you that even in a rough area, right? A lot of times it starts with just showing outward in what you're doing, but as you provide a quality level of service, people talk. People will tell their friends, hey, yeah, we're in this area, but I felt really safe here because they have patrols going around. They, all this other stuff, and that deal had I think it was like a 50-person wait list,
Mhm.
right? Like it's not like
Wow,
that deal is 99% and it has a whole line out the door, people wanting to go move in there.
Nice.
that's impressive. Wow, I'll have to go look that up after this. That's an
No,
interesting one.
definitely go look it up. I can look it up while we're talking.
Shamrock
And I'll
Garden.
tell you exactly what it is. But
Oh,
it was just an amazing, amazing kind of situation.
okay. On the I'm going to go back to the financial risk of doing the lease down that far, just because
Mhm.
yeah, it is a high risk. But did you have any issues having the two different tenant bases there at the same time that you had to manage through?
Um, no, because usually you can transition pretty quickly, right? That's like a 2-3 month time frame, and I wouldn't say big issues, right? And that's where, especially because for us, we brought the occupancy down before we brought it up,
Mm-hmm.
right? And so really, as you're bringing it down, people just see the bad people leaving,
Mhm.
right? And then you
Okay.
kind of find your where you plateau. then as it grows. So not really a lot of issues around the mix. And, on that property, we had an awesome security team that literally locked down the property, right? They put in a curfew and, after a certain time,
Wow.
like people were not allowed to, be just walking around. And so that very quickly got the drug dealers out, got the prostitutes out, and, everything starts to move forward.
Yeah.
That's really interesting. I've never heard of putting a curfew on a property before.
Yeah, and I mean, those guys are awesome. Like, yeah, they did a great job, right? And and it just shows people that there's a sheriff in town. Like, hey, we're investing the money to get this down. If you want to go sell drugs, you want to go do something, go elsewhere, right? Because you're not any car on the property wasn't even allowed to pull in if they weren't part of the property. They would tag cars. They would not let people loiter around. I mean, it was great.
Oh, okay. No, that's really interesting.
And then if you're a quality tenant, you actually appreciate that, right? And so
and when you bring it down to 40%, I mean, I'm sure there was some selective retention there. I'm sure there was we're getting rid of these guys, we're keeping these guys.
Oh, absolutely. Yeah, absolutely.
Yeah. And we've done that on a couple of our properties where we've bought, we do have a couple of properties with a little bit of hair on them. And that's the same thing we did, is we looked at who was at the properties and, who we wanted to keep, who were the good tenants, who were the ones that were paying their rents on time, who were the ones that were contributing to the goodness of the property, and, the drug dealers, the riffraff, so to speak, the ones that weren't, were the ones that were the first ones to be asked to leave.
And that's where, anytime you're doing that, every property has the grandma on the property. You want to find who that person is, right? That person that really has high pride of ownership. They know anything and everybody. They will tell you everything problematic. That person is worth their weight in gold. Like, you get that person, something nice every month, because they're your eyes and ears, right? Whenever you walk out of the property, it's very different than whenever a tenant walks out, right? And so people hide whenever they see management out, but you want to find that person that's that grandma kind of person at the property, right? It could be a grandpa, it could be other things, but it's typically, the person that's been there for a while, and she just really wants to make it a good place.
Yeah. And I'm imagining a couple of properties we have. I know exactly who you're talking about. I've never heard it said the grandma of the property, but they're there. They're absolutely there.
Yes.
100%.
Yeah.
All right. I'll switch gears a little bit. What interior and exterior amenities are you seeing have the biggest ROI, and does that vary a lot by location of the property?
Yeah, so it definitely varies a lot by location of the property, right? But the simple things that are consistent, flooring and paint, everybody does that. But really, another simple, cheap one that can be done is backsplashes, right? Now, again, we've done this. We've done everything up and down the spectrum on the upgrades. We've done the replacing all the cabinets and granite and all that, and we've done the simple term. But I mean, it depends on the asset, depends on what's going on. But like, at a minimum today, backsplashes can be done so cheaply, right? Like literally like glue on kind of things. And so there's, and it makes a big difference, right? And so
even
for
those
us,
glue stick-on ones, or the ones?
Yeah, those glue stick-on, get the higher quality ones. They work great, and it looks amazing. I mean, I was in San Antonio yesterday, did this day trip to kind of go check on all the properties, and I didn't even realize the model had it. And I'm like, man, this looks so different, right, than what I remembered a while ago. And so, paint goes a long way. Flooring obviously goes a long way. Black appliances goes a long way. And today, well, pre-COVID, black and stainless pricing had kind of narrowed. Right now, there's a huge kind of supply problem. But again, upgrading appliances where needed, right? But a lot of times, if you're on a C property, people just want a good quality place to live. It doesn't need to be decked out to the T's. And so there's kind of that balancing act between, do you over upgrade or do you not? And I've learned, we used to do a lot of CapEx quickly, and now it's more about we slow roll some of it, right? And see kind of what we really need to do. There's a property that we bought that we thought we're going to upgrade a lot more. And I mean, we've just been getting these insane trade outs, right? There's just so much demand for that location, right? And we literally, the CapEx is sitting in the bank, and we're just kind of, counting our money on that deal. So it's kind of, and so it's really, people a lot of times just want a good quality place to live. Now, whenever there's a lot of competition in terms of the supply side, then you start to figure out, how do I differentiate myself from the other properties?
Okay, so then on this, I mean, Brian, I mentioned that we got this 28 unit under contract, and you may have guessed from my questions, it's a heavy value add. It's a C-class property. We're going to be doing heavy lease down. Like almost everybody essentially has got to go at some point. So the question, like, I'm trying to figure out on that kind of a thing, because we're trying to decide what level of renovation to really do. right? So how do you make that call up front? Because it takes
Yeah,
time.
so
Like you want to make a model unit, you want to do it the right
absolutely. So
way.
you do paint really quickly. So people see, hey, this property is getting updated, right? Exterior paint, boom, it looks different. Now you have some people coming. You pick 2 units, you do the upgrade that you think makes sense, and you just gauge the reaction of tenants. Very quickly, you'll find that balance, and then you can try even today. Even now we have a 400 unit that we closed in December, and it's a big deal. And we have 3 different tiers that we're playing with just to see where that demand is. And so go in with an open mind. There's not a one size fits all, right? But on yours, you probably have a decent idea, and do you 2 units, do them differently, and just see what the tenants say, right? And that's where on those kind of plays, you want to have a very good pulse on what the true feedback is, and be eyes and ears on the ground so you can really decipher what you need to do, right? But a lot of times, especially on those, at the beginning, it's really about getting some leasing going. Later, it's about fine tuning. So there's nothing wrong with doing something simple, getting the occupancy with the right people, the right delinquency, then you can refine.
Okay.
There's always a little bit of trial and error. I mean, we've had one property where, we were going to do granite countertops, stainless steel and everything else. And we did that on a couple of units, and we didn't get the rent bumps we expected, and it was just like, okay, but definitely have that open mind. We ended up just scaling back, back our renovation plan, because the juice wasn't quite worth the squeeze. I mean, lots of dynamics as to why, but ended up juice not being worth the squeeze. And we've had other properties where, we've done the renovations we planned and gotten a lot more than the planned rent bumps. So there's a little bit of trial and error there, see what works. And I like the idea of, doing 2 different finishes on the inside and, see what happens. A lot easier to do on a 400 unit than a 26 or 28 unit.
Yeah, that's it. There's not a whole lot of variation there. But
Anyway.
one of the things I was more interested in the amenities as well, like especially interior. So like garbage disposals to protect the plumbing, dishwashers, microwaves, washer dryer implementation, because this property doesn't have exterior amenities, and so we're trying to figure out how to bring those higher end tenants in. But what's really expectations are. So we've done our work around the neighborhood, but it's still interesting to hear somebody who's got a little more experience.
That's very location specific, right? And like one property, really people just wanted a freaking microwave. It didn't have microwaves. They put it above the oven. Like that was the big selling point. I've never had a tenant say, hey, I want a garbage disposal. Now we put them in because that protects the asset, right?
Yes.
But I mean, it's not, that's something, like nobody's ever asked for that. And so, it's about what, and again, I just don't know where on the spectrum your deal is, but something like like a microwave goes a far way. Everybody needs a microwave, right? Like that's the world that we're in. Now, if they have to go bring their own, schlep their own, that sucks, right? Laundry is another one, right? Like, do they got to bring their own, people don't want to carry laundry. If you can put laundry in the unit, that's actually goes a far way.
Yeah.
So
we have 2 washing machines at our house, and both of them broke last month. And I can tell you, it's painful. Laundry is something that I'm going to rethink every time we do apartments. Is if they don't have hookups, or if they don't have laundry on site, especially some of the smaller properties can't afford it, how close is the closest one? And then is that an amenity you add? But I think Feras, you hit the nail on the head. It's very location specific. But anyway, we do have to wrap things up right now. Thank you, both of you, for your time today. One question for each of you to end things, and Feras, you go first. How can listeners learn more about you?
Yeah, definitely. So check out disruptequity.com, DISRUPT equity.com. You can also send me an email, Feras, FERAS @disruptequity.com.
All right. And we'll have links in the show notes for anybody who's looking to connect with him. And Rachael, same question for you. How can listeners learn more about you?
Best way is either on LinkedIn. You can search for me just by my name. I'm sure we'll put a link in the show notes. And then you can also email me or call me, Initech Management LLC, INITECHMGT LLC @gmail.com. I'd be happy to talk to you.
And we'll have links to those in the show notes. And if you're watching on YouTube, it's on her virtual background. So really, really easy to connect with her. All right. Once again, thanks a lot, guys. And I appreciate your time. And this was awesome.
Awesome. Thank you,
so
Brian,
much,
Rachael. Appreciate it, guys.
Thanks, Feras.
Hey, if you like that episode, make sure you hit that subscribe button. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, yet, you are missing out. So get yourself 30 days free by clicking the link below in the description, or go to thetribeoftitans.info, and we'll see you there.